la Facultad de Derecho de la Pontificia Universidad Católica de Chile, profesor Gabriel Boxan, hola. Señor director del Departamento de Derecho Económico, Comercial y Tributario y presidente de la Comisión Organizadora de las 14ª Jornadas Chilenas de Derecho Comercial, profesor Rodrigo Ochagavía Ruistaile. Señora Contralora de la Pontificia Universidad Católica de Valparaíso, profesora Lorena Carvajal Arenas. Doctor Georg Ringe, profesor de la Universidad de Hamburgo e invitado especial a las 14ª Jornadas Chilenas de Derecho Comercial. Doctor Maximiliano Escobar, profesor de Derecho Comercial y representante de la Universidad de Concepción en el consorcio organizador de las Jornadas Chilenas de Derecho Comercial. Profesores de la Pontificia Universidad Católica de Chile, integrantes del comité organizadores de las 14ª Jornadas Chilenas de Derecho Comercial. Profesores miembros de las universidades que integran el consorcio organizador de las Jornadas Chilenas de Derecho Comercial, profesores, expositores y asistentes, alumnos y público en general. Como Facultad de Derecho de la Pontificia Universidad Católica de Chile, nos complace haber acogido esta 14ª versión de las Jornadas Chilenas de Derecho Comercial, iniciadas en el año 2010. El encuentro y la discusión de los profesores que cultivan una disciplina es parte fundamental del oficio universitario. Ayer tuvimos la posibilidad de asistir a la presentación de 36 ponencias sobre los diversos temas que reúne el derecho comercial. Hoy asistiremos a la conferencia magistral del profesor Georg Ringe y al traspaso de la organización a la Universidad de Concepción, a quien corresponderá hacerse cargo de las 15ª Jornadas Chilenas de Derecho Comercial. Antes de dar la palabra al señor decano y al señor director del Departamento de Derecho Económico, Comercial y Tributario, quien dirigirán a ustedes los discursos de rigor, quisiéramos agradecer como facultad a todos los ponentes y asistentes que han dado vida a estas jornadas, así como a los profesores Jaime Alcalde, Fernanda Anguita, Juan Luis Goldenberg, Francisca Martínez, Roberto Ríos y Clemente Silva, que trabajaron durante varios meses en la comisión organizadora. El agradecimiento se extiende también a los ayudantes que asistieron a dicha comisión, Juan Pablo Durán, Isidora Lagos y Caitlin Muñoz. Finalmente, agradecemos a Andrea Valenzuela y al personal de Educación Continua de la Facultad por su apoyo en la organización, así como de la SEA Apoquindo, que ayer nos acogió. Por cierto, este agradecimiento comprende a los estudios jurídicos que con sus generosos aportes hicieron posible esta jornada, como aportantes principales, Barros y Arrázuri, Baker & Mackenzie, Bofil Mira Abogados, Keri Cariola, Díaz y Pérez Cotapos, Claro y Compañía, y Noguera Larraín y Dulanto. Como aportantes generales, Cuatro Casas, D.L.A. Piper, la de Abogados y Morales y Besa. Corresponde ahora dar la palabra al señor decano de la Facultad de Derecho de la Pontificia Universidad Católica de Chile, profesor Gabriel Boxan, hola, para que dé inicio a la clausura de estas 14ª Jornadas Chilenas de Derecho Comercial.
Muy bien, muchas gracias. Señor Rodrigo Ochagavía, director del Departamento de Derecho Económico, Comercial y Tributario. Señor Wolf-Georg Ringe, profesor de la Universidad de Hamburgo e invitado especial a estas jornadas. Estimada comunidad académica, señoras y señores, en estas palabras de cierre de las 14ª Jornadas Chilenas de Derecho Comercial, a nombre de la Facultad de Derecho de la Pontificia Universidad Católica de Chile, quisiera expresarles especialmente el honor de haberlos recibido a todos ustedes, distinguidos expositores y distinguidos participantes. De la variedad de temas que han sido objeto de las exposiciones de estos días, queda en evidencia la importancia del aporte que puede efectuarse desde la academia a dificultades jurídicas muy considerables, una de las cuales nuestro expositor también abordará el día de hoy. Y también queda de manifiesto el valor del aporte de la visión, del espíritu universitario, que hace posible estos momentos de sana reflexión. Es en ellos en donde se manifiesta la amistad académica, indispensable para que brote el genuino impulso de la búsqueda de la verdad, sin la cual la universidad queda desprovista de objeto y queda desprovista de sentido. Por ello es que muy brevemente quisiera detenerme en la importancia de la labor que cada uno de ustedes, como especialistas en derecho comercial, desempeña en el seno de la sociedad, Desafortunadamente, una aproximación prejuiciosa mueve a algunas personas a ver en esta disciplina y, por supuesto, en toda la actividad comercial, una suerte de mirada autorreferencial o incluso una mera técnica cuyo impacto se circunscribiría a la utilidad de unas pocas personas. Pues ¿cuánto se equivocan? ¿Cuánto debe el derecho comercial reconocerse y orientarse en miras de la construcción del bien común? ¿Y cuánto de este bien común depende, precisamente, de una actividad comercial henchida de criterios de justicia, de una actividad empresarial cuya mirada esté clavada en el bien de todas las personas, de una aproximación sostenible, innovadora, audaz y al mismo tiempo protectora y promotora de la dignidad de la persona humana? No ha de sorprender que ya León XIII, en su célebre encíclica Rerum Novarum de 1891, entendiera el comercio como uno de los elementos de la sociedad sana. Aquí empieza la cita. Ahora bien, lo que más contribuye a la prosperidad de las naciones, decía el Santo Padre, es la probidad de las costumbres, la recta y ordenada constitución de las familias, la observancia de la religión y de la justicia, las moderadas cargas públicas y su equitativa distribución, y aquí enfatizaba los progresos de la industria y del comercio, la floreciente agricultura y otros factores de esta índole, si quedan los cuales, cuanto con mayor afán son impulsados, tanto mejor y más felizmente permitirán vivir a los ciudadanos. Hasta ahí la cita. Esta cita, por supuesto, no es aislada. Responde a un espíritu consistente dentro del magisterio de la Iglesia. Más de un siglo después, Benedicto XVI advertía en Caritas in Veritate acerca de la grandeza del llamado al que hoy debe responder el mundo del comercio. Aquí comienza la cita de Benedicto XVI. Decía: aunque no todos los planteamientos éticos que guían hoy el debate sobre la responsabilidad social de la empresa son aceptables según la perspectiva de la doctrina social de la Iglesia, es cierto que se va difundiendo cada vez más la convicción según la cual la gestión de la empresa no puede tener en cuenta únicamente el interés de sus propietarios, sino también el de todos los otros sujetos que contribuyen a la vida de la empresa: trabajadores, clientes, proveedores de los diversos elementos de producción y también, añadía, la comunidad de referencia. Por último, quisiera recordar el énfasis personal que su Santidad Francisco le ha asignado al desarrollo de la actividad comercial. En un discurso de 7 de enero de 2022, dirigido a empresarios franceses, sostuvo que, aquí comienza la cita, el dirigente cristiano está llamado a considerar con atención el lugar asignado a todas las personas de su empresa, incluidos aquellos cuyos deberes pueden parecer de menor importancia, porque cada uno es importante a los ojos de Dios. También si el ejercicio de la autoridad requiere tomar decisiones valientes y a veces en primera persona, la subsidiariedad permite a cada uno dar lo mejor de sí, sentirse partícipe, llevar la propia parte de responsabilidad y contribuir así al bien del conjunto. Hasta ahí la cita. En síntesis, personalmente, tengo la convicción de que no poca responsabilidad de la buena gestión en el mundo del comercio y de su verdadera y concreta orientación al bien común, cualquiera de estos bienes comunes, el de la empresa, el de la comunidad política, el de la comunidad local, pasa por quienes dedican sus esfuerzos profesionales o académicos en colaborar a la determinación de lo justo en tal actividad, es decir, ustedes. Se trata de una labor permanente que requiere de la consabida actualización constante derivada de la movediza realidad del mundo del comercio y que ustedes han sabido cumplir a través de su participación en estas importantes jornadas, cuya finalidad precisamente ha de estar orientada hacia el bien común. Ya en el tramo final de mis palabras, quisiera también agradecer a todos quienes auspiciaron, patrocinaron e impulsaron este importante evento, haciéndolo posible y permitiéndole adoptar la estatura correspondiente a una actividad de esta naturaleza. Professor Wolf-Georg Ringe, I would like to express our deepest gratitude for your presence in this important academic meeting and for sharing your thoughts on a subject that blends the ever-challenging technological influences over commercial law with substantive approaches to this field and to the law in general. It is a great honor to welcome you at the Catholic University of Chile. Finalmente, quisiera expresarle públicamente al director Rodrigo Chacavía mis agradecimientos muy sentidos, no solo por su encomiable trabajo en la organización de estas jornadas, sino que por los años de profundo compromiso en que ha servido a toda nuestra comunidad de Derecho UC y a la comunidad jurídica nacional desde su posición de director del Departamento de Derecho Económico, Comercial y Tributario. Rodrigo, tengo la convicción de que tu periodo será recordado con especial cariño por tu entrega sabia y generosa, velando por el bien de todos y desatendiendo a cualquier ínfula y a cualesquiera vanas pretensiones. Me alegra que estas jornadas puedan dar un marco de especial relieve para expresarte, a nombre de la Facultad de Derecho, un profundo agradecimiento. Y a todos ustedes, al consorcio organizador, a todos los participantes y asistentes a este evento, que Dios los bendiga. Muchas gracias y sean siempre bienvenidos a la Facultad de Derecho de la Pontificia Universidad Católica de Chile.
Agradecemos al señor decano por sus palabras. A continuación se dirigirá a ustedes el director del Departamento de Derecho Económico, Comercial y Tributario y presidente de la comisión organizadora de las 14ª Jornadas de Derecho Comercial, profesor Rodrigo Chacavía Rustaelo.
Señor decano de la Pontificia Universidad Católica de Chile, don Gabriel Voxán, estimados profesores, profesoras, alumnos, expositores, ha sido un honor haber trabajado con la comisión que organiza las Jornadas Chilenas de Derecho Comercial a lo largo de estos años en que me ha tocado ser director del Departamento de Derecho Económico, Comercial y Tributario, y notar en los académicos de esta área del derecho el especial interés que tienen en difundirla y hacerla un área viva de la cual se puedan hacer contribuciones concretas a el quehacer nacional. Y en ese contexto creo que hemos contribuido desde la Facultad de Derecho de la Universidad Católica en la organización de estas 14ª Jornadas chilenas de Derecho Comercial, y por lo mismo quiero agradecer especialmente a quienes estuvieron a cargo de esta organización, a Jaime Alcalde, a Juan Luis Goldenberg, a Roberto Ríos, Clemente Silva, Fernanda Anguita, Francisca Martínez, y quiero agradecer especialmente a los estudios de abogados que nos apoyaron en esta función, quienes fueron patrocinadores principales como Baker & McKenzie, Barros y Errázuriz, Bofil Mir, Keri y compañía, Claro y compañía, Cariola Díez Pérez Cotapos y Noguera Larraín Dulanto. Y como patrocinadores generales, Cuatro Casas, DLA Piper y alguien que se me olvida, que me van a matar, digamos, pero Morales y Des. Profesor Valdivieso, perdón. Sin más que agradecer y sin afán de quitarles más tiempo, dejo con ustedes a Francisca para que nos haga una presentación del profesor Ringe, quien nos va a hacer una ponencia sobre la influencia de la inteligencia artificial en los mercados de capitales en la actualidad. Muchas gracias.
Agradecemos al señor director del Departamento Económico, Comercial y Tributario por sus palabras. La conferencia magistral de estas 14ª Jornadas Chilenas de Derecho Comercial se titula Artificial Intelligence and Market Manipulation on Capital Markets y está a cargo del doctor Georg Ringe, invitado especial a nuestra facultad. El profesor Ringe cursó sus estudios de Derecho en Passau y Lausanne, obtuvo un máster en Derecho en la Universidad de Oxford y se doctoró en la Universidad de Bonn. Fue investigador del Instituto Max Planck de Derecho Privado Internacional y Comparado junto con Klaus Haupt. Fue profesor de Derecho Comercial en la Universidad de Oxford entre 2007 y 2012 y en la Escuela de Negocios de Copenhague entre 2012 y 2017. En la actualidad se desempeña como profesor de Derecho Financiero y director del Instituto de Derecho y Economía de la Universidad de Hamburgo, profesor visitante permanente de la Universidad de Oxford y Stanford. Investiga cuestiones de derecho de sociedades, mercados de capitales y mercados financieros desde una perspectiva interdisciplinar y de derecho comparado. Es miembro investigador del Instituto Europeo de Gobierno Corporativo de Bruselas, miembro del Instituto Bancario Europeo de Frankfurt del Meno y coeditor del Journal of Financial Regulation. Como profesor visitante, imparte regularmente clases en destacadas instituciones académicas de Norteamérica, Europa y Asia. Ha asesorado al Parlamento y la Comisión Europea en diversas materias relacionadas con el derecho corporativo. Thank you very much, Professor Ringe, for the effort you have made to be with us today. We know that you have traveled a long way from Asia, South Korea, and have arranged your schedule to be able to deliver this lecture. The School of Law of the Pontificia Universidad Católica de Chile thanks for your visit. Thank you very much, Professor Ringe, for your interesting lecture.
Okay, good morning. Dear Dean, dear professors of the university, dear colleagues and friends, it's wonderful to be here, and I'm extremely grateful for the very honorable invitation to come to Chile. It's true that I had some difficulties in coming here related to travel complications. I don't want to go into the details, but all is well that ends well, and I'm here, and I'm not jet lagged, so fully integrated into the time rhythm here, and I'm delighted to contribute to this event and share a little bit of my current research. I'd be very happy to take any questions at the end if there is any interest. Also, during the talk, if you have any difficulties understanding stuff, then please do and interrupt me at any time. So the talk I'm going to give is, as Francisco was saying, an interdisciplinary work. I work in Hamburg together with lots of economists, but recently I'm also working together with computer science colleagues. And this is a project that I'm doing together with Alessio Azzuti, who is an economist, and Siegfried Stiel, who is a computer science colleague at Hamburg. So we really try to bring together three different disciplines here to try to see what the impact is of new technologies and, of course, most importantly, artificial intelligence on the law, and on the integrity of the capital market. That is what my talk really is about. Great. So to give you a little bit of a quick overview of what awaits you in the next 45 minutes, we will show and I will discuss that there are some spectacular achievements in recent years in machine learning, which is a subfield from artificial intelligence, and also, of course, big data. We need big data for it to work really well. So together, this shows us that there is a true potential for having something that we call autonomous AI agents. So agents, tools that act completely autonomously on the capital markets, without any human interference anymore. They just make investment decisions themselves. And the emerging legal and interdisciplinary discourse sort of is focusing on ethical problems that we have on AI and crime? You know, what if AI does something wrong? And what's the, you know, is there a person, for example, that acts, or is AI acting itself? We take a little bit of a different angle here. Right? So we show that there is a potential for truly autonomous AI trading going on. So it's not anymore human people that trade on the capital markets. It's artificial intelligence that is trading and will be trading much more in the new features. And this poses a number of serious risks for market integrity. Market integrity, because artificial intelligence has a great potential for human beings. It's a great efficiency gains and speed, and AI never gets sick or ill or is overslept or anything like that. But there is a dark side to it. What we show is that artificial intelligence also has very negative consequences, because it may ultimately lead to things like that we might call cheating on the market. It may learn certain tactics on the market that we don't want to have on the market. Fraudulent behavior on the market, driving up prices, manipulating prices, and all of those things. And going back to the law, we demonstrate that the law has some difficulties in catching up with those developments, right? Because it's made for human beings. It's written for things like intent and causation and all of those things which we have difficulty in applying to artificial intelligence persons. And finally, I'm going to illustrate that also market supervision doesn't really catch up with what's going on. So that's in a nutshell already the little bit the overview, but let me put it a bit more into context. I would argue that there are three different ways how artificial intelligence is being used in trading and is used already, right? I mean, when you go to the stock market today, you maybe see a handful of people, but there are not human traders anymore. It's all done electronically. 90%, 95% is already done electronically. And increasingly, they are using AI also to help them getting better results. And so sometimes we have situations which the law is sort of okay with dealing with. So for example, when capital trading firms deliberately use AI to cause a particular harm to somebody else. So this is a conscious development and used by human experts, and the best example for this is the case from Athena Capital, which this was years ago, in 2009 already. It's a high-frequency trading firm, which used artificial intelligence to manipulate the prices, all in the last minutes of the trading day on NASDAQ. A very deliberate manipulating tactic. So here human people deliberately used high-frequency tools in order to manipulate the prices in the last seconds of the closing of the day. And the SEC, the American market supervisor, fined this firm, Athena Capital, with I think $1 million or something like that. So this was the first big prominent case where we saw what the potential is of this new technology. But it was relatively easy to handle because humans used the technology intentionally to cause harm to others, right? So that's relatively easy to deal with. Then the second category is where we have unintended consequences. So we use technology, but there is sort of side effect, negative side effect to it, like the bug in the system, if you like. And this may be illustrated by the famous flash crash that people may still remember in 2010. There was a big software error, essentially, which caused market prices to fall dramatically. And you know how machines are. When somebody is selling, then automatically everybody else is selling at the same time. So the downward spiral was really happening at magnificent speed, which caused really prices to drop dramatically. And then there's a third category, which is the one I'm talking about today, where we don't use AI intentionally to cause harm, or we don't sort of use it as a side product, but the AI agent acts intentionally and deliberately in order to, be profitable, for example. So you must imagine the situation as something where you, as a human, you use the algorithm, you give the algorithm a pot of money, and then you say, dear algorithm, you go and invest on the market. And the algorithm goes out and does try and error. invests, learns, this is profitable, this isn't, right? So it's a try and error thing, and the only thing that you tell the algorithm is to maximize the returns. That's the only instruction you give them. And then you lean back and go home and have a glass of wine or something. So we wait and see, and the algorithm is basically all doing itself. That's the scenario I'm talking about. And I bring together for this a number of findings from different disciplines, as I was saying earlier, particular computational finance literature, which is an important informative background for all of this. And I need to be a bit technical here. Maybe it's not that important, but for the tech experts in the room, what we are studying is a version of artificial intelligence which you can name deep reinforcement learning. It's a combination of two things. It's on the one hand, it's deep learning, so that's a computational approach that allows you to learn through this try and error process, essentially, with an uncertain and dynamic environment. So it's not predefined. It's not that you know everything in advance, but you have like an uncertain and constantly adjusting field, and without that, you just do trial and error. And it's coupled with deep learning methods, so deep reinforcement learning is coming together, and deep learning is nothing else than math, ultimately. It's a mathematical model, but unprecedented. It can move like playing chess, not anticipating the next 5 moves, but anticipating the next 5 million moves or something like that. So it really is an amazing anticipation of what comes next. And if you pair the two together, you really see the potential of these algorithms, which is amazing and has made fascinating progress over the last several years. And if you take that together, then the expectation from computer science research is at the moment that maybe we don't have them yet, but we will very soon have those AI traders that do act independently on the market. Oh, sorry, it disappeared? Oh, back, okay. This is probably an artificial intelligence joke, which is playing some jokes on me. So the potential is that they will act independently on the market, that they learn from experience in this dynamic and uncertain environment, which is the crucial point, while pursuing this predefined objective, right, which is, as I was saying, really only one goal, and that's to increase the returns of your investment. And if you take that together, you can see clearly that it's very comfortable for humans to simply say, I think AI is much better at spotting the big business opportunities than I myself would ever be. So that's the technical background. Now on to the potential of all of this for the market. And this is for us the basic question, right? Let's see if this really works. Yeah, so the key question that we are analyzing is, can those guys learn how to cheat? And I must disappoint you, the answer is yes, probably, very, very likely that yes. We don't maybe see it, we only maybe see the tip of the iceberg at the moment, but the iceberg is there. And I'm going through 2 scenarios to illustrate what I mean. First, lab studies are already out there in the computer science world, and they should really cause all the alarm signals to flash in our sphere. So the first field is market manipulation, right, where we show that AI can learn and adapt new manipulative strategies as optimal and rational strategies, regardless of any human intent. So you don't teach the algorithm to manipulate the prices. You just, as I was saying, say, absolutely innocent. You just go out and make your investment decisions. And the other thing is that, of course, AI can also lead to even optimized new manipulative strategies. So something that we don't even know yet, right? So that's the key point. AI may even develop new manipulative strategies that we humans haven't really even been smart enough to detect ourselves. And that's really the really scary bit. In our research, we then show this in a couple of case studies. So one common thing is called spoofing. Spoofing is a manipulative strategy where you basically make a bid or an offer on the capital market with the intent to quickly withdraw the offer just before it's filled. Yeah. So you suggest that there is a particular demand for a particular security in order to drive up the prices, and then just before it's executed, you withdraw it. Yeah. Or another tactic may be what we call pinging, right? It's an aggressive strategy where you put lots of small trades out there, lots of very small trades for just maybe 100 shares or something like that, to test, and to anticipate that there, to pull out any hidden market orders that you don't know yet. So other market participants may see, oh, well, there is a sort of demand for this in the market, and then they come out and place a particular thing as well. So those are familiar strategies that humans have also come up with. It's nothing new in that sense, but it's still fascinating to see that algorithms are quickly learning those tactics themselves. And what maybe is new is that, and maybe it's different from human traders, is that these tactics may also apply cross-market and even cross-asset. So cross-market means you can do this in different securities markets at the same time. You can use it in New York at the same time and in London, and you benefit from the different regimes and the different tiny differences in the prices across those markets. Or cross-asset may even be a new tactic, which human traders haven't really explored very much. So for example, if you hold a particular security and you hold a derivative, which is referred to that asset. So the main asset, and then you have a derivative, which is of course related to it. Then you may manipulate the price in the former, in the asset, to benefit from the position you have in the derivative. So that's a cross-asset market manipulation, which also is being demonstrated as something that AI can learn. And then maybe the look in the future is that there may also be something that we call information-based forms of manipulation. So these algorithms may pull out a lot of information from the web, from all our, I don't know, Facebook profiles, or maybe Facebook is old-fashioned now, but I don't know, LinkedIn or whatever Instagram, whatever you using, pull out all of this information and all the publicly available information and combine that knowledge with their investment decisions on the market. And of course they can generate and they can pull in more information than any human being can ever assemble in one brain. So bring all of this together, and then the prospect really becomes a bit scary. That's the one part of it. And then the second part of the study refers to collusion between algorithms. And that's I think also quite fascinating development. So what we show again in the research is that there may be a potential for different algorithms to collude, at least tacitly, and manipulate the prices in certain ways. This is a big field in, I don't know if anybody is doing antitrust law here or competition law. This is a big thing in that field at the moment, because there is of course a fear that algorithms may collude to build cartels and drive up prices or keep prices stable. So there it's already well advanced as a discipline, but it's we of course looking at it from a capital markets perspective. But it's the same thing that here we don't really know how this is still a big puzzle. We don't know how this collusion really happens technically, how they speak to one another, right? It's just maybe a combined understanding that, if you drive the price of this up, then I will also benefit from that, and the next moment I will, drive up the price of that security, and then you benefit from it. So it's like a bit of a tit-for-tat strategy that may be behind all of this. And again, just a few examples of where this might work best. So we developed a number of parameters where this may work best, a number of examples to study it. And the coordination thing, the collaboration thing may not work in every scenario in a big liquid public market. Maybe it's not that easy, but in a small market segment, where you have not many players, where the barriers to entry are relatively high, that sort of coordinated behavior may be very likely. And one example are sorry, I'm too close here, are quote-driven markets. So you have a number of relatively small professionals, market makers, who are responsible for continuously putting their bids and ask prices that others are willing to accept. And the second example would be benchmarks, so financial benchmarks mostly, that play a fundamental role as a reference value for pricing other financial assets. So the potential here might be that there might be some benchmark manipulation going on, which might then again be a cross-asset example. So after this horrible glimpse into the future, let's try to understand what the law is doing all about this. So what's the law doing? The problem is our traditional liability law, I suppose it's the same in its basic features anywhere in the world, right? Requires typically things like proof, evidence of certain things. One thing that we commonly need is some sort of scienter. When you, for example, claim something in tort law, you always need to have either intent or negligence or something like that. You need to prove that somebody was willing to defraud you, or at least accidentally, negligently cause some harm. Without that, it's going to be really difficult to reclaim that. And the other thing is that the law really typically can only bring damages claims against natural persons. If there's a human being that did something, you cannot really go to court and say, I would like to claim damages against this algorithm or this artificial intelligence tool itself. So the wish list of things is typically intent, first of all, and that's going to be really difficult. If you think about my introductory statement of the 3 different ways of using AI, then in the old cases, Athena, it was easy because it was intentionally used. But in a moment where I just use an algorithm and just say, please make money, then it's very difficult to find in that chain of responsibility any intent, in some human brain that really wanted to cause that particular harm. And even causation may be another problem, by the way, because you have the typical causation claim between somebody who did something and then the harm that was caused. But we all know, probably from our traditional civil law education, that there may be interruption of the causation chain, right? When somebody else jumps into the causation chain and takes an independent decision which wasn't foreseeable for the original person, then there's going to be a big question mark between you and the causation and the harm. And even negligence may be very difficult to demonstrate because you must really show that you carefully didn't oversee what the algorithm was doing, you as a human person, and neglected your control and your oversight duties, for example. So these problems, I think, are obvious. They are already being discussed in the more traditional algorithmic trading systems, the old one that we had 10 years ago, maybe, for example. And in the scenario that we described, the fully autonomous decision-making from AI, this will become even more problematic. So one problem that we have in compliance already is that there is a complete lack of explainability of AI decision-making. So you must understand this in a way that the algorithm takes a certain decision, but later on we find it extremely difficult to find out what was really the reason for it to take that decision. So the AI collects 1 million of different data points, and which out of the 1 million different points of information really caused the particular decision to take? Completely open, right? That's the famous black box problem. So the artificial intelligence is a black box. We don't really understand what was the main thing. So for example, if an algorithm is used by public administration, that's a big problem, because you don't understand fully what was it that caused the algorithm to refuse my application for, I don't know, a driving permission or something like that. And that makes it particularly difficult for supervisors then to go in and to say, yeah, I now know this was the main point that caused a particular investment decision to be taken, and therefore I can trace it back to the human person behind it. That would be ideal if we had. And the same problem, of course, arises in enforcement because, as we've seen, you need to establish the causation chain, you need to find out who was the human person behind it, who was giving the instruction to do it, who acted negligently, who acted with intent, for example. So all in all, I see that our legal system really isn't well equipped for dealing with that sort of new market participants. That's the main thing. Now, let's not completely despair. The law can be changed, can be updated, and in fact, there are some tools already that some countries, some jurisdictions are applying, and we call this algorithmic governance. So there are some tools already that are being used in practice. So you may intervene, for example, at the investment firm level. So the investment firm level that uses artificial intelligence is subject to many rules. Investment firms are always subject to many rules, but in our specific context, they may be subject to notification requirements. So tell the supervisor, by the way, we are using AI in this firm. You need to do what we call risk management. Every solid market participant needs to do risk management, so you need to verify the algorithm, you need to test it all the time, validate it, and internal systems need to maintain to reduce the potential risks. The problem is that these tools are useful, certainly, but at the end of the day, they rely on the initiative of the investment firm to really properly keep checks of what's going on internally. So put differently, they are largely self-reporting from perspective. So what's the incentive of the investment level, of the investment firm level to say, hey, supervisor, by the way, we use a very, very bad artificial intelligence which may cheat on the market. So the investment firm doesn't have a great incentive to report about all of this. So they might just tick the boxes and tell what is absolutely necessary, but they will probably be not very aggressive enforcers. The second line of attack might be at the trading venue. The trading venue means the stock exchange, for example. The stock exchange may be subject to certain rules, and absolutely is in many jurisdictions around the world. So there must be arrangements on systems, operational resilience, for example. It must install maybe circuit breakers. That's a prominent tool against high-frequency trader, and other tools to mitigate electronic trading. Now, what is the problem here? The problem is, I would argue, one of the competition between different trading systems. There is a global competition between stock exchanges. Everybody wants to have a big business. So if you, as Stock Exchange 1, are very aggressive in keeping out electronic trading firms or make it very complicated for them to be part of your stock exchange, then all the firms will go to Stock Exchange 2. And money and algorithms are international and are not visible, so they quickly move between the different stock exchanges. So that competition between the different places makes it, again, very difficult to imagine that they will be very tough and excluded. Everybody's now depending on electronic trading. You want to have that business to also create liquidity and so forth. And then finally, you may intervene as a legal system at the market conduct supervisor level. So, for example, market supervisors need to go in and check, right, like the SEC or other bodies in other jurisdictions that may monitor and check what's going on. And of course, their job is to keep the integrity of the market and make sure that no mischief has been happening. The problem with that is, first of all, how experienced do you think are people working for market supervisors in terms of technology? how well equipped are they in terms of financial resources and human resources, yeah? And then how quick are they in responding to the challenges that are being happening. So what I would argue for, and I come back to that, is that we really need probably much more expertise and much more aggressive approach at the market supervisor level. But at the moment, they probably still use typewriters in many jurisdictions, right? No, I'm exaggerating, but you get the point. I mean, there is a sort of a catching up to do. The financial industry is always much more advanced than the supervisors frequently are. So the bottom line then is it's really difficult to achieve any real and effective transparency and to ensure, auditability and accountability for specific learning methods in machine learning. And the trade-off is that the better the machine learning technique is, the safer the application is, but the lower the explainability is. So there's basically a trade-off. So you want to have safer and well-equipped machines, ideally, as a society. You want to have efficiency in the technology because they promise better results and more efficient and liquid markets. But if you do that, then the explainability is really low. The decisions that are being taken are really even more advanced and more complicated and difficult for human people to understand. And the other problem that I was already highlighting is that there is a international competition between this. Every country wants to have the best and the most advanced technology at the risk of exporting negative externalities on the rest of the world. It's like an international competition for attracting new technologies. Everyone wants to win first in the AI race. China and the United States are currently at the forefront of desperately trying to be first and having the best technology, and looking at those negative consequences is maybe something that is really just annoying in the background, right? No, we want to, in the name of innovation and technological progress, we want to be the first who makes great progress in this particular market scenario. So, lastly, I tried to develop some policy alternatives. So what could be done in the law to make the law better able to deal with those issues that was describing. So what could the law do if you want to reform the law and upgrade it and make it fit for dealing with this sort of a problem? 3 points. The first one is to basically ensure traceability. One concept that is known as the human in the loop idea is that every order, every decision that's been placed on the market must make sure that there's always one person from flesh and blood who is responsible for that particular decision. So if you force firms to make such a system, to establish such a system, so every trade is somehow accountable to one person, that person will ultimately be responsible for this thing. So then you can essentially get someone by the hook and say, that was under your watch that it happened. That would be number one thing to do. And the second point that we are proposing here is maybe a bit revolutionary, in the sense that we argue we should move away a little bit from the old style legal way of, going to court afterwards and trying to bring litigation against somebody. And you know how it is, it takes years, and you need to prove causation, and you need to prove intent, and it's not really cut out for the fast-moving world on the capital markets. So we advocate for a much faster, ideally even ex-ante approach of a much more dynamic type of law that tries to cope with the problem. So, for example, we would need to have ex-ante checks before AI is even being used. So something like a screening mechanism, a vetting tool before the AI is even being allowed to participate in the market. Something like, I'm sure it's the same in Chile, before you're allowed to drive your car on the road, you need to have it authorized by some sort of control agency that checks, whether your car is safe to drive on the road, and, whether the lights are properly flashing and whether the brakes work all right and all of this, right? And that's also something that could be done. So in other words, the AI tool that you use must be authorized before it's even allowed to be acting. So you need somebody looking at it and giving green light. That's not a panacea, that's not perfect, because remember, the AI is self-learning. Yeah, so it's very difficult sometimes to predict ex ante what the algorithm will do later on, yeah, how much it will develop. So it needs to be coupled by some sort of ongoing monitoring process. You don't need to check only at the beginning, but there needs to be a constant supervision. Ideally, a real-time market surveillance. If we really had the resources and the possibility at the market supervisor level, we would essentially supervise those algorithms in real time. And that leads me to the final point, that's the dream wish for the future. That is what we call supervisory technology, or the technical term is subtech. That's the fancy new word. So essentially, what it amounts to is that, look, the industry uses more and more technology, but we should use even more technology also on the supervisory level, because of this cat and mouse game between the two. The industry is always faster, and we always come with our little bit old-fashioned law to catch up with what's going on. What we need is greater expertise, education, financial resources at the government, at the supervisory level. And then ideally we would have this real-time dialogue. So all the data that's been reported from the capital markets come to the market supervisor and are being analyzed in real time. And in 99% of the cases, that's absolutely fine. But once, the red light flashes because they have detected something unusual, some unusual trading pattern in the market, then this would be something when you probably still need a human supervisor who looks at the case and then takes a particular measure to intervene, for example. Yeah, that was, of course, a bit of a science fiction dream perspective, but this would ultimately be the possibility to address the problem in a dynamic way. Good. Ending with a dream is always nice. So that was it. Thank you so much for listening, and I look forward to any comments or questions that you may have. Thank you. Yes. Thank you. I think that's a wonderful question. So how, just to summarize, I hope I understood you correctly, how can we try to ensure that we do still promote innovation in our society, and at the same time ensure that there is no harm being done in all the negative side effects? I mean, that's of course the perfect question to ask. So let me answer you with another project that I'm working on. That's called Regulatory Sandbox. I don't know if that's something that you are also doing here in Chile, but a number of countries worldwide are experimenting with such an approach. So a regulatory sandbox is to allow new technology firms to play a little bit in the sandbox, which is like a controlled environment where supervisors and new technology firms are cooperating, if you like, and learning from each other. So on the one hand, you, as a supervisor who is completely from the 19th century, learn something about the new technology and the new ideas and also see where the potential risks are. On the other hand, the new technology firms learn about the existing regulatory regime and where potential barriers are and what might be changed in order to let them in. So it's I think, so it has worked extremely well in London. So the fintech market in London was an example where this was being done. And London really is now one of the leading fintech markets in the world, thanks to this program. It's an intensive program where you need to select a few new promising firms and let them into the sandbox. So it's a very controlled environment, and you can even relax certain legal rules for them to make it easier for them, but at the same time you need to supervise them really closely so that no harm is being done. So it's a very intensive cooperation essentially, and at the end of the period you let those firms out in the real world and hope that in that way you have achieved, you know, that innovation is happening, and at the same time that you have updated the regulatory regime so that no harm is being done. And that would be probably not a perfect response to your question, but I think this would be, I think that's a very promising tool to try to combine the two. And that the examples that you gave, where firms are really just entering the market to exploit some arbitrage and something that is unregulated, that's very commonly a bad signal. That's probably typically something smelly. So I think a constructive dialogue between the two worlds of markets and supervisors is hopefully a promising tool to overcome that. Yeah, welcome. Yes.
Maybe this is, I'm oversimplifying things, but I remember from like the novels of Isaac Asimov that robot has a kind of product contract that they cannot kill somebody, like robotic ethics. Wouldn't be as easy as just to probably memorize and to do some basic rules like you have a code, you can work with the AI, but you have to be a code by which it cannot manipulate stocks or securities so that can alter the value of the security. Wouldn't be as easy as that to just program the AI with some boundaries. I mean, of course it can be creative and it can go beyond the benchmark, but there are some rules. Wouldn't be as easy as that.
Sounds beautiful. Sounds beautiful. But the problem with that is you would basically have to copy-paste our entire legal system into the robot. Right? Maybe the rule, thou shalt not kill, is relatively easy to implement, to program into the tool. But we know that life is not simple. And there may be some jurisdictions would say, yeah, killing normally is not allowed. But, for example, if you are in defense situation, you're being attacked, then legal systems say, okay, exceptionally, as a last resort, you may even kill the person who's attacking you, right? So that's already an example of a gray area. So the judge must come in and say, was that really a defense situation, yes or no, right? Or you may, I don't know, depending on the legal system we're talking about, in some countries it's allowed sort of in desperate situation where somebody is in complete coma and 90 years old and will not survive for very long, will not realize anything, to actively support their death, depending on the legal system, of course, right? So they make choices, but lawyers, as we all know, are dealing with those borderline cases, and transplanting this into an algorithm is very, very difficult. Just to give an example from the field that I'm studying, market manipulation is sometimes prohibited because it's very bad, because it harms others. But in other scenarios, for example, in an IPO stage, investment banks usually buy lots of shares of the company they are underwriting in order to stabilize the market price. And that is something that is allowed. So the algorithm must be able to distinguish the one situation from the other. And this is why we need lawyers, because law is complicated and real life is complicated. So essentially what we would have to do is transplant the brain of a lawyer, not one, but all lawyers, into the algorithm and then make those decisions. So that's why in practical life, it's going to be quite difficult. Sorry, I think you. Yeah. Mm. Yeah, so the second point is easier to answer. The answer is simply yes. Interoperability and technological neutrality is absolutely key, and that's why supervisors need to make sure that they keep everybody in board. The industry is always constantly trying to develop tools that only they can use and the supervisors cannot, so they really try to trick and to game the system a little bit, but I absolutely agree with you that supervisors need to work hard to keep this interoperable, absolutely. The first point is a bit more difficult, so if I understood you correctly, you're asking, or maybe can you repeat it? Human in the loop. The human in the loop, yeah. Mm. Mm. Okay. Okay. Mm. So I think what I can respond to you is that the human in the loop idea does not mean that human takes more decisions than not, right? So the only point is that you allocate a certain responsibility for the decisions that have been taken by the algorithm. So you don't have the problem that humans are, we're all limited, right? We all make bad choices. We have a home bias, for example. We usually buy shares from our home country, even though that's completely absurd, right? We should look at the entire world. But we are biased, we are in love, we are tired, and algorithms all don't have that. And I'm not saying that we should replace or substitute algorithmic decisions with human decisions. It's just to say, you know, in every algorithmic decision, as great as it may be, there needs to be somebody who is responsible in the sense of accountable for it. So somebody the supervisor can talk to and say, you know, you basically have the oversight duty of this particular algorithm. Mm. No, exactly. No. Exactly. No. The human being wouldn't look at every transaction. It would be just bearing the role of the responsibility for it, right? Just be somebody you can call and doesn't have to interfere with the decision making itself. You know? Probably this human in the loop needs to be part of the vetting process and the constant monitoring that I was discussing and all of this. But of course, if you involve the human, if you have to ask every human before every algorithmic decision has been taken, that would completely defeat the purpose. Yeah, I'm absolutely there in agreement. Yes. Oh, I'm not sure I fully understood your point, but I think the answer to the first question is yes. This is what I've tried to show, right? I mean, deep learning is really anticipating what's going on and learning in this dynamic environment so that it sees, you know, that strategy really is in the long term the most profitable. If I just behave, like a very good citizen and only do everything well, then I'm not going to take home as much money as in the other world. You know? Yeah. Yeah. Oh, okay, but that goes back to the previous question, right? Because then if you want to tell him this is not allowed, then you would basically have to copy-paste our entire rule work of capital markets law into the algorithm, and all the court decision and all the bodies of enforcement and all those still borderline decisions, right? And manipulation of prices is sometimes good, sometimes bad. So that's that's from my perspective the problem with going down that route. Mm. Collaborate. You tell me. I mean, the beautiful job of an academic, of a professor, is to say this is what should be done, but in the real world I agree that it's very difficult to achieve that. Probably governments need to spend a lot of money. That's a simple answer to say, you know, we need to recruit the best graduates of computer science to come and work for the government and not for some filthy company from Silicon Valley. So yes, we need computer power, we need expertise, but there are simple things that could be done, right? You could start already in elementary schools with teaching people computer science. I think that's a big challenge for every society, that people understand at least where the risks are, and then, going further with universities to teach computer science, teach lawyers even to learn technologies. Yeah, some people are shaking their head. That's a very difficult thing, I know, but I think it's absolutely essential for any law school in the future to look at those things. Sorry, that's all I can really say in response. Yeah, sorry, did you have a follow-up? Yeah. Yeah. Mm. Yeah, great point. Yes, there is. I can speak, for example, at the European level. So the European Central Bank is having a big SupTech unit now already, right? So they are trying to attract good computer science people to work for them and build some capacity. But there are also international bodies. The Financial Stability Board is now the big global standard setter in financial regulation. It's sort of working under the G20 group and setting a lot of standards and best practices exactly for that tool. So I think, yes, there are some efforts to do it. The problem, of course, is that you will never get the entire world to collaborate on those things, right? I mean, there will always be the little offshore haven somewhere, which is attracting the bad guys to come. We know this from taxation, for example, right? There's always those offshore havens where people go for tax reasons. And the same will be, for lax regulation on financial markets. So, yes, definitely we need collaboration between governments. I'm still a little skeptical, I must admit, on how much that can really achieve. At the end of the day, we really need capacity on the level of each. Unless we have a world government one day, right? Unfortunately, no. Good. Yeah. It's a big, big, high-level question. I had some time to think before responding. I think ultimately an activity-based approach is probably more promising, partly because, as I was saying, you don't know in advance what the technology can be used for. Right? And it becomes more and more important now that we have general purpose AI. So until we had ChatGPT, for example, we had usually AI that was really specific for one particular purpose. And then it was much more tempting for lawmakers to say, this sort of thing is high risk artificial, this is something that we want to ban, for example, or this is something that we allow. But with general purpose AI that is coming out, so AI that is really doing many, many things at the same time, and that can learn and adjust its techniques, it would be completely absurd to ban this tool itself, right? So it must be on the activity itself that we are looking at. And in fact, I don't know if anybody's following this, so the European Union is at the moment proposing a big AI Act, a big framework for AI, and this is one of the key questions, in fact, at the moment. It started, so the thing is, the legislative process is taking such a long time. They proposed this whole thing, I think, 2-3 years ago. So it was already drafted before we had ChatGPT, and now they need already to update it because it's not fast enough to keep pace with it. It's another illustration of the point that this cat and mouse game between regulators, always very slow and always in a democratic debate. And yes, that's good, right? I'm not saying it's bad, but it's just catching up with a fast-moving world is so difficult. Because, no, let me start differently. I agree that competition is healthy, and ultimately we believe, at least in the market economy, we believe that competition is usually a force for the good, and also competition between countries, competition between stock exchanges normally is a very positive thing because everybody leads to everybody wanting to be better than the others, right? But there is a problem, and that's, in economic terms, it's what we call externalities. So by being better, you sometimes impose negative consequences on others. So by, for example, allowing tactics that lead to people to be worse off by these consequences. And the problem is that in many situations never be found out, right? So if it becomes known, I agree, if the media know all about it and it becomes a public issue, then you might expect some self-regulations. You might see stock exchanges saying, I really need, in order to attract investors, I need to establish myself and give myself good, positive, solid rules, absolutely. But in many situations, and I'm absolutely 100% sure of our daily lives, people never find out about, I made a bad investment, I could have won €5 more in that transaction or not. So sometimes small harm that's been undetected and that is not flying high, and people are short-sighted, people are over-optimistic in that. I mean, the human brain has many deficiencies, right? So we don't always make rational choices in making our investment. And so ultimately that's why on a global level, competition needs to be treated with a grain of caution, I think. I think that's a great point. It would be wonderful to speak to some insurance companies and to find out. My fear is, however, in our current world, where the enforcement and detection of those practices is very limited, it's extremely unlikely that some board member will be held accountable for, you know, what's going on. So at the beginning of the talk, I gave you a few cases that made headlines, right? And somebody was fined, and maybe that was an insurance issue. I don't think that sort of any normal D&O insurance normally doesn't have to worry too much about this, right? Unless, of course, regulators have listened to my talk today and upgrade their legal system and make it much more, you know, dynamic and try to tackle the problem, then, you know, it might be something for the future to think about. Good. Yeah. Francesca, you tell me when I stop, okay?
Una última pregunta.
So, a great question, I think, to conclude the talk. If you invite me again, then we find out. So I come back in 5 years, promised, and then we'll see. I unfortunately cannot look into the future and see what the next big issue is, but on a more serious level, I think it's first of all important to do the homework here. And I think I took your question also as asking, you know, how close to policy is our research. And I'm happy to report, for example, that the piece that I was presenting caught the interest of some financial regulators. So I'm in close dialogue with people in the Netherlands, for example, and I've been discussing that with them, and they say, look, this is exactly our day-to-day job, to really find out what is really happening in the first place. Because we only see, as I said in the beginning, the tip of the iceberg, and we don't, first of all, really difficult to find out in real life whether trades were being made by an algorithm, and then because they get a million points of information every day, and first of all, which of them were done by humans, which of them were carried out by algorithms. So they try to develop patterns that allows them to see what was algorithmic trading, what wasn't. And then in the second step, they need to find out what was manipulative tactics, where was really harm done. And so it's really hard to have this dialogue between academics and policymakers in this particular course. And I think that's really something that we need to work on. Yeah. So I expect, maybe that's a nice way to close, that the collaboration between academia and practice is super important, and whatever field we're studying, I think that's something we should improve. Sorry. Yeah.
My theory is that maybe in 5 years, we're talking about the replacement of the lawyers by artificial intelligence.
Or even law professors. Yeah. Yeah, I sent my avatar in 5 years. Yeah. Okay. Thank you so much for your time.
Muchas gracias.
Thank you very much, Professor Ringe, for your interesting and challenging lecture. And in the name of the School of Law, we are going to give you a gift. So, thank you very much. Yeah, you can open it, yeah, of course. Para concluir, el profesor Maximiliano Escobar recibirá las 15ª Jornadas Chilenas de Derecho Comercial a nombre de la Universidad de Concepción.
Hola, buenos días a todos. Me sumo, por cierto, a lo vocativo, pero no puedo dejar de agradecer
al comité organizador, la persona de Rodrigo, por las brillantes jornadas que ha organizado este año la Pontificia Universidad Católica de Chile. Bueno, siguiendo la línea que me antecede nuestro expositor, yo vengo a hablar del futuro. Las próximas jornadas de Derecho Comercial van a tener lugar en Concepción y sin perjuicio que ya el comité tendrá, el consorcio tendrá oportunidad de reunirse, podremos conversar detalles, fechas, lugares, la forma en la cual llevaremos a cabo la ritualidad de las jornadas. Yo creo que nos han dejado ustedes, la Pontificia Universidad Católica de Chile, un gran desafío por delante, ¿ya? Y las palabras que yo quiero dejar acá simplemente es a modo de agradecimiento en representación de todos los que participamos y que no tomamos parte de la organización por el trabajo que han hecho. Tuve la oportunidad de participar de las primeras jornadas el año 2010 y secuencialmente prácticamente de todas las que han tenido lugar. Lo que vimos ayer creo que es un avance en el evento, creo que es un avance en la disciplina. Veo y noto que son cada vez mejores la calidad de las ponencias, las reflexiones, el tiempo que podemos tomar. Yo creo que esta versión en eso lo ha mejorado notablemente. En la sesión de ayer tuvimos tiempo para la reflexión, la conversación, la discusión de ideas, la magnífica charla de cierre que nos han brindado y la discusión que ha podido tener lugar entre el expositor y el público. Creo que dan cuenta de la madurez que va alcanzando este encuentro y que esperamos que, por cierto, la Universidad de Concepción pueda siquiera acercarse a lo que han logrado. Una última cuestión que no quisiera dejar de decir. Nos ha complacido, porque lo hemos conversado con varios amigos que formamos parte del consorcio, el ver que está llegando nuevas personas, nuevos profesores, profesores más jóvenes. Lo hablaba al pasar con Jaime, con Guillermo ayer. Creo que nosotros ya no somos la cota joven de los expositores, y eso son siempre buenas noticias. Siempre buenas noticias, sobre todo con nuevas universidades que se van sumando. Para terminar, simplemente quisiera dejarles extendida la invitación. Los esperamos en Concepción el otro año y, por cierto, reitero mi agradecimiento y mis felicitaciones. Muchas gracias.
Muchas gracias, profesor Escobar, por sus palabras. Con esto damos por concluida este acto de clausura de las 14ª Jornadas Chilenas de Derecho Comercial y agradecemos a todos los que nos han acompañado por su presencia. Muy buenos días, and thank you again, Professor Ringe, for your incredible lecture. And we are going to welcome back in 5 years more.
I hope before.